Welcome, everybody. Thank you for joining us today. Today's webinar is titled Consistency is King. Build your retirement with real estate. One thing to always remember, discipline leads to habits. Habits lead to consistency. Consistency leads to growth. In today's webinar, we're going to be featuring two different companies. The first, Ignite Funding, will be covered by Carrie Cook, President and CEO. Next, we will have Chris Trembly, Director of Operations for Preferred Trust Company. So first up, we're going to have Carrie Cook.
As a mortgage broker offering trust deed investments, there's a variety of different types of mortgage brokers. We're not all cut out of the same cloth. As it pertains to Ignite Funding, we are a full operation mortgage broker. And what that should mean to you and what you should be looking for when you're looking to invest with a mortgage broker or in a trust deed investment is a full service mortgage broker. And let me tell you why. Ignite Funding goes out and we actually source our own loans. This is important because we're not working with brokers throughout the country that are bringing us loans that we're then paying them. We actually source our own loans. We underwrite our own loans internally. We don't ask for other people's opinions, except for broker price opinions or appraisals or those sorts of things. All of that is done in-house. Further to that, we do all of our own capital fundraising. Now, when we originally started raising for trust deed investments in 2001, we had to maintain or create a stabilized platform for raising funds. We are now to a place, some 10 years later, where about 50% of our capital fundraising actually comes from referrals from our existing clients, which we're very proud to say. But that doesn't mean that we're not always constantly looking for capital as we are funding these loans. The next step of the process is loan servicing. Sometimes when you work with mortgage brokers, they're very happy to collect their origination fee and peace out. That doesn't bode well for me. As far as consistency is concerned, what you want to do is you want to create some consistency with your investors in order for them to keep coming back and wanting to participate in trust deed investments with you. So we do not outsource our loan servicing. When our borrowers make their payments, or when they don't, we take care of all of that for our investors. We're making sure that our borrowers are making their payments. We're also visiting all of those properties to make sure that the projects are moving forward as they were intended or originally originated. And then from there, I just mentioned briefly that we also collect. Now, the collection of what we do when a borrower doesn't make an interest payment, a lot of this is on our website, so I won't be super specific about this. But the point I'm trying to make here is if we originate the loan and something goes wrong, we're going to step in and collect that asset. We will foreclose on that property, and we will also dispose or sell that property on behalf of our investors. I challenge you to find other mortgage brokers out there that will do all of this. If they won't, please read the fine print and figure out what exactly you're going to be charged for loan servicing, what exactly you're going to be charged if they have to collect on that project, or who do they pass you off to. At Ignite Funding, you won't experience that. Our annualized returns range from 10 to 12%. I know that may seem too good to be true, but as the interest rates continue to increase, that amount is starting to shrink between what they can get at a bank and what they can get with us. So 10 to 12%. Short-term investments, 9 to 18 months. I get asked a lot of questions about why is it so short? Did you see the interest rate above the short-term investment? Borrowers do not use us for long-term lending. We are bridging a gap for what they can't get at a bank or what they need right now in order to close the deal. So 9 to 12 months is a short-term endeavor. We also use that 9-month rule because we don't want to deviate into being a fund. We want our investors to have real estate collateralized in their investment, not collateralized to the fund managers. So there are some securities exemptions if you stay within that 9-month window. So we do that to ensure that our investors are on collateralized real estate investments. Loan portfolio performance. You know, as soon as you hear about companies like ours, the first thing you want to understand is, do you have a track record? And we most certainly do. We have funded since March of 2011, $1.3 billion. And we have paid out over $100 million in interest to our investors. Asset management performance record. There's two sides to every story, right? It's not always unicorn and rainbows. So we also post our asset management performance record, keeping everything very transparent. Of the $1.3 billion that we have funded, there have been losses to investors. And I'm okay making that statement because I don't want anybody to perceive that we are perfect. Nobody is. All investments have risk. Of that 1.3 billion, 0.31% of that has been lost. Very minimal losses. I think a lot of that ties back to the fact that we originate, we service, and we collect. So that's great, Carrie. Thank you for all that information about Ignite funding. Now, what the heck is a trust deed investment? Now, I could give you a really long terminology for what a trust deed investment is, but I'm going to simplify this for everybody. A trust deed investment is when a lender, which you are deemed to be the lender as the investor, lends money to a borrower, which would be a home builder or a developer, that is secured by real estate. It's not more complex than that. It's very similar to if you, for your home mortgage, you obviously are the individual that's looking for lending, i.e. the borrower. The lender is who? The bank. Same philosophy, just turned on its head. Ignite funding does offer investments in both the residential and the commercial side of things. This is important to understand because you have to ebb and flow out of markets when you see that the demand is either greater or less. So if the demand is greater in residential, you'll see our portfolio focusing on residential in that market. If the demand is greater for commercial, you'll see us focus on commercial. The beauty of having a short-term investment of 9 months is that we can move in and out of markets and in and out of residential or commercial as the need is put forth. Now, residential and commercial comes in many varieties. The acquisition of land, residential example. The acquisition of a commercial building, commercial example. Development of residential land. This is developing your sidewalks, your putting your power in, et cetera, bringing all the necessary components to actually developing a project. Commercial, similar, it could be similar, but it could also mean that that commercial project is actually, again, being turned on its head, taking a mall and converting it into a lifestyle center. There will be some development phase that's going on the commercial side. And construction, I believe, is obvious to everybody. It is the vertical construction of residential. Commercial, it's vertical construction, but it can also be the TI improvements, the renovation that's happening from that commercial project. So that's what a trust deed investment is at its core. So what makes Ignite funding different? So if you're looking at investing in real estate and you're looking at investing in collateralized real estate, there's a couple different things that make us different. One is deal flow. I don't like to put us in the bucket of defining us as a crowdfunder because we're not, in the sense that we're not offering our investments online for you to click a button, put $1,000 in, tell me you're an accredited investor when you're not, and you move on with your merry little way, right? And then you sit and you wait for them to have deals available for you to put your $1,000 to work. Now, I know that probably is beating up on crowdfunding a bit because in the sense we are crowdfunding, right? We're a multi-beneficiary lender in that we have a variety of different individuals that are investing on one loan. The difference between us and them is we don't have a deal flow issue because we're not waiting for a broker to bring us deals. We're sourcing our own deals. So the consistency of what we're funding is very consistent month after month. On average, we're funding about $30 million, which gives you a lot of variety, which moves into the geographic and borrower diversification. We are mitigating your risk by ensuring that we're not staying in just one location. I was a victim of 2008. We had the vast majority of our portfolio in Las Vegas. I think we all have learned lessons from 2008, if you were in real estate at the time, which has forced us to learn from those lessons, diversifying our geographical locations and where we're located and where we're lending, and also our borrower diversification and not focusing on one area. Less volatility, collateralized investments versus investing in a fund. When the investment is collateralized, you own it. Should anything happen to ignite funding, or should the borrower not make the interest payments? If a borrower doesn't make an interest payment in the fund, you're relying on the fund managers to do right by you. Also, those fund managers may be reaping the benefits when they sell those investments by not allowing you to capitalize on that additional return. With us, you capitalize on that additional return because it's your investment. Low barrier to entry. The minimum investment at Ignite Funding is $10,000. And I'm going to teach you a quick lesson on consistency, because I said I would keep focusing on that. If you take $10,000 and you invest $10,000, how long, and you guys can answer, how long would it take for that $10,000 to turn into $100,000? If all you put forth was $10,000, and we'll touch on that in just a second. Consistent monthly income. There I go again, using that word. This is passive income that's paid to you monthly. So the 10 to 12% divided by 12 months is paid out to you each month. I like to call it mailbox money. The decreased downtime. This is where I love to talk to individuals about that affiliation with Preferred Trust Company. Ignite Funding doesn't just work with Preferred Trust Company. Our clients do open accounts at other custodians. That is okay. I actually encourage it because if they're using qualified funds, I'm happy about that. But that affiliation creates downtime for you because we're able to move more quickly between the two parties. And Chris will talk a little bit more about that in just a little while. So here's the simple process. Here it goes. Step one, we open an account. All of that is done online. It's quick, it's easy, it takes a couple minutes. Step two, you select an investment. We're different, like I said, from crowdfunding. We want to talk to you. We want to get to know you. So yes, you can see our investments online, but you will talk with a sales representative at Ignite Funding so we can make sure that what you are selecting is right for you. And we're ensuring that you understand the risk that's involved in these types of investments. Then we complete our loan documentation and we send funds in. Our loan documentation is all done electronically. We do, however, require that a special power of attorney be provided to us. This allows Ignite Funding to act on your behalf as it pertains to that loan, as we're working with the borrower through the servicing and if we have to collect. Then the loan is funded. Once the loan is funded, you're going to receive post-closing documentation. That post-closing documentation is proof of your collateralized investment. Then you collect the interest payments. So if you were to invest in an investment on the 15th, let's say, the next month is when you receive your interest payment for the prior month. When the loan is repaid in that short period of time, we start this cycle all over again. You get to invest in whatever investments that you would like. Now, if you wanted to take $100,000 investment and invest in 10 projects at $10,000, that would probably provide you the best degree of diversification. That's okay with us. We actually encourage it. We do not want you putting all your eggs in one basket. So as I transition over to Chris, who's going to talk about Preferred Trust Company, I get asked a lot of times, Carrie, how should I invest at Ignite Funding? You provide so many options. You can invest through my 401k. I can invest in a trust. I can invest in an LLC. I can invest in, cash. I can have a joint account. I can have qualified funds in an IRA. What do you recommend? I can't give recommendations on what you should do, What I can do is give you recommendations on maintaining a level of consistency. And I know what happens when I invest in cash. So on the left-hand side of the screen, when I invest in cash, I take my $10,000, I earn my $1,000 of interest. I'm paying more than $300, but a 30% bracket, you're gonna pay $300 in taxes. That leaves me with a net income of $700. Now, when I do that, I kick myself, right? Because I also know, and I was the same person many, many years ago that was paying into my IRA every month, making my contribution, or every year, excuse me, making my contributions. I was actually doing my monthly because it's easier. But every year you pay into these contributions. And this IRA just sits. It just sits. But you're doing it, why? You're doing it because you're saving from paying on taxes. But then we let it sit. We're not putting it to work. So what I want to illustrate on this screen, and the reason why Preferred Trust and Ignite Funding are affiliated companies, is because Ignite Funding recognized that we needed to have a custodial service that allowed our clients to invest through qualified plans, a self-directed IRA, into our investments in a seamless way. Because when you hear the word easy or free, it tends to get our attention. So from the free perspective, my IRA sitting over at Schwab was free. So I left it there, but I also left it there earning nothing. As soon as I activated and pulled some of those funds out of Schwab and into a self-directed IRA, I switched over to the right side of the screen, saving myself a little more than $300, but saving myself that $300. Now, if you start extending that beyond a $10,000 investment, imagine what that net income could look like over 26 years. 26 years, Carrie, why did you just say 26 years? Because that's how long it takes $10,000 to turn into $100,000. If all I do is put $10,000 in and let it accumulate with compounding interest, it will take me 26 years for that 10,000 to be 100,000, just by being consistent, just by thinking through how I'm investing my funds. If that same $10,000 was $100,000, you would have $1 million in 26 years. So I think it's worth talking about this transition of how you invest your funds and what it means to you later on in life. That is why Preferred Trust was born. In 2007, it was one of those companies that we all need, but we're all a little hesitant to take that step, to move some of our funds from where we currently have them and expand our horizon outside of the market and that volatility. But if nothing has taught us over the last couple of years, or the last year, or the last 6 months, is that we need to be diversified. We need to think outside that box. So consider that as I'm going to transition this over to Chris Trembly, who's going to talk to us a little bit about how do you do that? And she's going to help you realize the ease of being able to do that, since I've been able to illustrate the consistency of what that means. And then once Chris is done presenting, we'll come back together and we'll do some Q&A. So Chris, I'm going to hand it over to you so that you can talk us through Preferred Trust Company and what it is that we do.
All right, thanks, Carrie. We're glad to be here today with Ignite Funding. So let's flip over here. There we go. All right, so just like Ignite Funding, right, in the consistency, sticking with the consistency theme, Preferred Trust Company is a custodian. We are licensed and regulated by the state of Nevada Financial Institutions Division. We specialize in self-directed IRAs. We are also regulated by the DOL, the Department of Labor, and by the IRS, the Internal Revenue Service. The one thing that makes us a little different, you're probably thinking to yourself, well, I have an IRA at Schwab, like Carrie mentioned, or TD Ameritrade or Edward Jones. So I'm ready to invest. I've got an IRA. There is a difference, although we are similar to them in what we do as being a custodian, a licensed custodian, we hold very different type of assets. So the Edward Jones of the world and the Schwabs of the world hold publicly traded assets, stocks, bonds, mutual funds. On the other side of the table is preferred trust company and custodians like us that hold alternative investments, which is exactly what Carrie talked about today. A trust deed investment through Ignite funding is considered an alternative investment, and therefore you do need a self-directed custodian. What we feel sets us apart and makes us different from those other self-directed custodians or administrators out there is the superior customer service that we provide. We have built the infrastructure, we have superior technology that we've put in place to be able to provide that high level of customer service at reasonable fees. And we're very proud to say that our annual fees, it's been almost 10 years and no increases in our annual fees. We'll talk about those a little bit later, but that's part of how we develop the customer service level that we have. The other thing that Carrie mentioned, the fact that we meet those investment deadlines. Obviously, having Carrie run both companies and oversee both companies is quite important. She understands the real estate side, the investment side. And so for us, being able to fund those investments very quickly, obviously a borrower, when they have deadlines to meet, can't wait for funds to be sent. So we move very quickly through the investment process to ensure those borrowers meet their deadlines, and so that we can get your money working for you as quickly as possible. And there's no downtime in your investing and the income that you can earn. So then what we have to kind of decide is what type of IRA do you currently have? So we talked a little bit about it might be an IRA at Schwab or Wells Fargo. When we talk about IRAs, there's really two types. There's the tax deferred and tax free. So you may see marketing and sales schemes out there that tell you, oh, open a gold IRA today or open a real estate IRA today. Well, there's no such thing as a real estate IRA or a gold IRA or a digital IRA. It's either a traditional or a Roth. It's either tax deferred or tax free. Those are the types of accounts that the IRS has provided for us to have to save for retirement. So on the tax deferred side, there are three types. We're not going to get into the specifics of all three today. We can certainly help you through that, give you more information. Our representatives are always happy to help and go through that, because there may be a situation where you might be a SEP IRA might be better for you. You might be self-employed and that might be an option for you. Or you might be a small business owner, 50 employees or less, looking for something to provide a retirement account for your employees, where a simple IRA might be best for you. So those are the three types of tax deferred accounts there are. And then of course, there's the tax-free Roth account. Now you can make contributions to those accounts every year. For today's purpose, we'll talk a little bit about traditional and Roth. You can actually have both types of accounts, but all in your contributions are $6,000 per year. So once you decide what type of IRA you have or what type you'd like to open, maybe you don't have an IRA and you want to get started, then you make your selection between one of those two. So then your question might be, okay, great. Now I know I want to open a traditional IRA, but how do I fund it? So there are some options. There are various options. When we talk about a rollover, we're talking about actually funds from a former employee 401k plan. So maybe separation of employment has happened and you have these retirement funds sitting in there. You might even have them in a rollover IRA because they've forced you to move them. So you can always do a rollover from your current or your former 401k over to a traditional IRA. You can do a direct transfer from one IRA to another. So maybe you have that IRA already established at Edward Jones, and we're just going to transfer that over to an IRA at Preferred Trust Company. And then there's also the option of making a contribution. You can actually do all three. A traditional IRA can handle the intake of a rollover, a transfer, and a contribution. So you can maximize your dollars that you have to actually invest. So these are the options to fund. So step one, obviously, you're going to need to fill out an application very similar to Ignite Funding. We have our applications online. It's a fairly easy process, takes about 20 to 30 minutes to go through. The applications, all the various types of applications are on our website, and we can also help you through that. A representative can help you through that. Once you have your application complete, then we actually have to get the funds over to preferred trust company. And so we do that in the form of a transfer or a rollover. There's specific paperwork that we use to be able to request those funds from your current custodian so that they can be deposited into your IRA with preferred trust. And then step 3, that's actually the most exciting portion. That's really why we're here today, is to talk about the investment portion of it and you deciding what investment that you want to select. Now, obviously, today we've talked a lot about, Carrie talked about the option for a trust deed investment, but there are also other options, other investment types that you can hold in a self-directed IRA. So we want to make sure that you see those and understand what your options are, because diversification is key. So if you take a look at this map that we have here, it's actually easier to talk about the things you can't invest in than it is to talk about all the things that you can invest in. So the IRS has pretty much outlined a few things, if you check out that red line, of the things that they feel you can't invest in or that are non-investable. So, and if you notice, they're all along like the collectibles and art, gems, alcohol, rugs. These are things that the IRS feels that they cannot track. You know, we're not going to sit around and see where your art collection is being stored, or if you buy and sell your art, or drinking your alcohol. That's one thing that the IRS says is a no-no. So everything else is pretty much fair game. If you take a look at the real estate side, everything from actual real property, rental properties, flips, tax liens, tax deeds, private REITs. And then you also look at mortgage notes, promissory notes. On the other side of things, you can also invest in oil and gas, very big today, very popular, timber, precious metals, and then digital currency. That seems to be something that's up and coming as well. People like to invest in Bitcoin and Ethereum. Those are all okay investments for your self-directed IRA. All right, but back to the trust deed investment. So you're probably thinking, all right, now that I've selected the trust deed investment, this is what I want to do. How complicated is the paperwork? And one of the things that we've really been able to do with the synergy between the two companies and that affiliation is make it very streamlined for our clients. We understand that this is a lot of paperwork. Sometimes it can be confusing. So all of this paperwork is actually provided by Ignite Funding to Preferred Trust Company on behalf of your investment with them through your IRA. So on the initial onset of the investment, there is an authorization and direction form. This is basically your authorization to Preferred Trust Company to use your IRA funds to invest in a trust deed with Ignite Funding. So, and that paperwork is actually part of the paperwork that you'll complete with Ignite Funding when you first open your account and you fill out the application. So it's very streamlined, very easy. Once we receive that authorization form, then we are able to send funds from your IRA to Ignite for the investment. Once the investment is placed, as Carrie mentioned earlier, all that post-closing documentation, all of that's provided to Preferred Trust Company directly, and we keep it on file for benefit of your IRA. So it's very streamlined, it's very easy, and very little work for you to have to worry about. So then the cost, everybody wants to know, everybody says, well, my IRA right now, Edward Jones, is free. Nothing is free, right? They make money off of the investments that you select. That's what makes us very different. Preferred Trust Company is not licensed to give any type of investment advice. So we don't make any money off of the investments that you select. 100% of the income that you make off of your investments is for yours to keep in your IRA. We make our money off of the fees that we charge to process your investment. So if you take a look at the annual fee, I mentioned earlier that we haven't upped and changed our fee schedule, increased any of our fees in almost 10 years. Our fee schedule is based on the value of your IRA. We tend to see the more money that you have in an IRA, the more active you are, the more investments that you make. And then to make a trust deed investment with Ignite Funding, it's a flat fee of $20. So no hidden fees. We display our fee schedule on our website. It's in part of our application. So real quick, we're going to take a look at a $40,000 investment. This is about average what we see. $40,000 comes in. You want to know, well, how much am I actually making once the fees are deducted from my account? So on the previous slide, we saw that a $40,000 account value will garner you a $300 annual fee. Or if you want to break it down like some custodians do, it's $25 a month. A lot of custodians like to use that as a marketing tool. It's only $25 a month. Well, if you annualize it, it's $300. We also have a minimum account balance requirement of $500 at all times. And then, of course, your trustee transaction fee, which we just spoke about, $20. So if you break that down, Carrie mentioned that you are earning interest monthly. So that's $1.67 per income transaction coming into your account. So if you look at that $40,000 and you deduct those fees, what you have to invest is actually $39,180, which means that 10% annualized, you're looking at getting back $3,918 into your IRA as income. So that's a pretty good amount of income generated from one simple investment with Ignite funding. So there are some things we do encourage you to do. Obviously, when you're looking at investment sponsors, when you're looking at custodians, you need to figure out what the right fit is for you. As far as being a self-directed custodian goes, you need to do your due diligence. We're not all created equally. We encourage you to look at the Better Business Bureau reviews. We encourage you to look at any complaints under the IRS or even the Nevada Financial Institutions Division, or whatever state that custodian is licensed in. If they're licensed, that's also an important thing to look at. It's important that they do hold some kind of trust company license. So these are things that you want to look at, as well as the investment sponsor. Do your due diligence on the investment sponsor, go to their website, read their reviews, understand, like Carrie said, both sides of it, the actual investment, any defaults that may have occurred. These are all things that you want to look at. And then you have to decide, is the self-directed IRA and alternative investments right for you? We looked at a great example of how you can earn 10% interest off of that investment for a year annualized. These are all things that you want to consider before you get into an investment. And then if you want more information about the companies, you can contact us toll free. You can email us. You can check out our website. And then I think we're going to get to some Q&A. So I'll bring Carrie back in and we'll look at some Q&A for both companies.
All right, and Chris and I don't mind sitting side by side. Just a little fun fact about Chris and I. I know that all of us obviously experienced the pandemic in different ways. Chris and I actually never had a day off during that period of time. Chris represented Preferred Trust in the office, and I represented Ignite Funding in the office, because both of our companies move a lot of money every single day. And we needed to be here for our staff, and we sent them home for a short period of time, only about 6 weeks, as was required by our governor in the state of Nevada. But when we talk about consistency and we talk about these two companies, we are here for our clients. We are nothing without our clients, from both perspectives. And so we do want to take a moment to take any questions that you may have of either one of us for both companies. I know Chris had mentioned that, one of the things that a custodian cannot do is give investment advice. And here I sit as the CEO of Preferred Trust Company, and I just gave you investment advice about Ignite Funding. It is an interesting role to play on both sides. And I know that many of you may have questions about that and maybe concerns about that. And so I want to very quickly, let you know the reason why we're telling you that these companies are governed under two different sets of regulations. We're also examined every year under those two different sets of regulations. So I do answer to two different commissioners. Those two commissioners had to get together in 2014 when I started or took over the position as CEO of Preferred Trust, to sit down and say, is this an individual that could separate and not blur these lines? And they have been in each year thereafter and have realized very quickly that I absolutely can. So that is why I have Chris here representing Preferred Trust Company, so that she can talk specifically about the custodial services. And I was here representing Ignite Funding and specifically talking about the investment services. But as it pertains to Q&A, we are a pretty dynamic duo. So anything that you guys have as far as questions, we're going to go ahead and take those. We did kind of run through that pretty quickly, but we have found that the Q&A section is actually, in some cases, more informative than what we just had to say. So we're going to engage with you at this point. I know Maddie is sitting over on my left-hand side, who is handling all of our electrical or technology that's going on. Chris and I just show up and do this. But are there some questions that we want to take from there?
Yeah.
Okay,
So Gary asked, at Roth initiation, can he use all three funding methods simultaneously?
Yes, if you have I think I understand the question. If you have a Roth IRA, are you looking to roll over, transfer, and make a contribution to the account and use all three means of funding the account to invest? And yes, that's absolutely fine. You can do one rollover a year, you can do multiple transfers a year, and you can contribute, and all in, you can combine all of that to make an investment.
Perfect. And then from Steven, he's wondering, can I take monthly distributions of just the interest earned each month?
Absolutely. A lot of our clients do that. We offer several periods of time, beginning of the month, end of month, for you to take distributions. You can definitely just designate the interest earned as your distribution. We have a short form that you have to fill out, and once that's on file, it can be recurring every month.
And then he's wondering, if I want to move from my current self-directed company, but I have active investments at Ignite, how would that work?
Well, that's part of why it's very seamless for us, and the affiliation is very helpful. So we work directly with Ignite Funding. It's a very easy process. You would fill out the application with Preferred Trust Company. We would initiate the transfer from your current self-directed custodian. The transfer documents actually allow for you to transfer cash and assets. And then once we have that outgoing, we will work with Ignite Funding to retitle those assets in the name of Preferred Trust Company for your benefit out of the current custodian.
And then from James, can you explain how you suffer losses on collateralized loans?
absolutely. So of the losses, I know you use the word suffer. It really is. I don't like to lose money, so I'm very risk adverse, which is a good thing, right? A person who's running a company such as that, if they're personally risk adverse, they're going to portray that onto the investments that they're offering their investors. Why? Because those are my habits, right? And if I'm consistent with my habits, that's what I'm delivering to you. But there are circumstances that I can't control. And when we have defaults of investments at Ignite Funding, I will tell you that I personally am engaged in all of those processes. Not that I don't have personnel that can handle that, but they know that I want to be involved every step of the way. And what happens is there's a couple things I can't control. What I can control is when we underwrite a loan to make sure that we have adequate equity available in that project should something happen and we take it back. We know that when we take back property, there's always going to be costs that are involved in taking back or foreclosing on a property. That's a given. Where we lend is another, decision that needs to be made because you have judicial and non-judicial states. In the non-judicial states where I don't have to go through the legal process, we're taking back the property much quicker, usually about 4 months or 120 days. In the non-judicial states, it could take years to get the properties back. I'm not saying we only focus on non-judicial states. We do focus on judicial states as well, but the equity spread is usually a little bit bigger, right? Because the carrying costs during that period of time are going to cost more for us to maintain that property. So I'll give you an example. When you have a home builder who is in the midst of construction, and for whatever reason, they come into financial woes and they stop. We now have a half completed home. Ignite Funding's depth of professional aptitude to taking care of that, we have been known to complete those houses. We have been known to go out and find another builder to complete those houses because the return of capital to our investors was greater than to have a half completed house and try to sell it to somebody else. In those types of situations, there may be losses because for us stepping in to finish building the house is much different than if that home builder would have finished it themselves, right? We're going out looking for contractors. It's costing us a little bit more. That's where we may see some squishing of that equity position that we had. It starts to really narrow really quickly. So in that regard, that's where we have seen losses. where borrowers just complete financial ruin. And we're having to step in midway through a project. That's where we have seen our losses. Besides that, when you're investing in land, land has a very small carrying cost associated with it. And these are all things you should consider as an investor when you're investing in these different types of investments: land acquisition, development, construction. Where do you want to be? What's your risk tolerance associated with that? So that's where we've seen it. Again, if you look at our asset management performance record, you can see every single loan that we've taken back and the results of those loans, the duration of time that it took us. We make all of that available on our website and transparent for you.
Okay, next question. How long does it take for a preferred trust to process investments, interest payments, and payoffs?
Ooh, I love this one because we can happily say it's the same day. So when Ignite Funding sends us the payments, they're posted that day to your account. That's what makes it so great to have that affiliation. We move very quickly through that process. So unless it's sent at the very end of the day where it would post first thing the next day, but it's normally the very same day.
And that right there is exactly why people move from one custodian, self-directed custodian, to preferred trust. Because that consistency, if you're waiting 3 weeks for them to process your payoff that you received from Ignite Funding, that's a solid month that you have just missed in interest. So that $10,000 over 26 years, it ain't gonna be $100,000 because you're going to be missing a month every single year, and that's gonna start to add up. That is exactly why people move to preferred trust.
Next question. What are other ways clients can invest with Ignite Funding outside of an IRA?
Well, we talked a little bit about that. There's a lot of different varieties and ways that you can invest. So I would say second to qualified funds. And I'll throw this out there. I think we could probably share it. Preferred Trust Company right now is invested with their clients that are mutual clients about $100 million. I'm very proud to say that. What I'm not proud of is the rest of us that are sitting out there investing in cash and paying a lot more to the IRS than we need to. And that's okay. We love the cash component of that. Just look, all I ask you to do is look and see if you have qualified funds. Because it will save you a ton of money in the end. But probably the second biggest is the cash accounts and joint accounts. Third to that is probably trust accounts. I know a lot of individuals have started trust accounts as a means of additional protection for your assets. So that's probably the third. Then we start to see a menagerie of things. Then it starts to just kind of roll into all different kinds of companies, LLCs, S Corps, C Corps, LPs, 401k plans. They start to get really creative with solo 401ks, and it just kind of runs the gamut from there. We also have nonprofit organizations that work with us and utilize the means of earning consistent monthly income. Doctors' offices are using us with some of their simple IRA plans. So yeah, there's a lot of options to invest at Ignite Funding outside of the qualified plan.
Do I have to make contributions to pay for the IRA fees?
No, you don't. It's really up to you. Most of the time, our clients have their fee deducted from the cash available in their account. They'll leave out knowing that they have that annual fee coming due. Again, we only pull it out of the account on an annual fee, on an annual basis, on the anniversary of your account. So it's not pulled monthly. So if you know your fees are coming due, let's say in the month of October, then before you reinvest your funds, leaving that amount out that will cover your fees, it'll be withdrawn directly from the account. You can reimburse your account by paying your fees via a credit card, and that's no problem, but you don't have to. And it's considered a manual fee payment actually, and not necessarily a contribution because it's a fee to Preferred Trust Company. It's not an expense associated with the actual investment. So you don't have to make a contribution necessarily. You can use a credit card to pay for those fees.
Okay, this next one is for Ignite Funding. How do you vet your borrowers?
Vetting borrowers. Oh, this is fun. So vetting borrowers is kind of a two-prong approach. So I had mentioned previously that, we're a little different from bank financing, where when you go to a bank and you're getting your mortgage, first thing they do, sign right here, we need to run your credit. That's the very first thing that they do. That is honestly the very last thing that I do here, because my role is to make sure that I am valuing that asset correctly so that I leave that equity cushion. Remember we talked about that? So the asset is the most important to me. Not to say the borrower isn't, but when our underwriting team is done underwriting that loan, then it switches over to the psychology of who the borrower is, how they operate. We go visit them along with the property itself, but a lot can be told when you walk into a borrower's office. Is it an absolute mess? Are they staffed? Do they have the proper staffing? Are they overstaffed? What types of projects have they completed before? Are they nimble to move within the market? All of those things are evaluated from the vetting of a borrower perspective. Their financials. I love to rip apart companies' financials. You'll walk in, right? And they're a little caught off guard when you ask for their financials, as any company would be, but they're private companies and they don't like to share that. And I push on them to share that because I want to understand where their revenue streams are coming from. And that they have a variety of different revenue streams in order to pay our higher interest rates that we're charging. There are so many things that go into vetting a borrower. I would need a lot more time. I could do a whole presentation on how we vet a borrower, but really the borrower, they are as important as the asset, right? We're not here to take back assets. But the asset is the first thing we need to focus our attention on. And then it's getting into the minds of that borrower, what they've accomplished, how long they've been doing what they've been doing, how successful have they been. And then I run their credit. I run their credit last because it tells the story of everything that I've heard from them, from the visits that I've had, from the research that we've done, from the projects that they've completed. It really does tell a story, but it doesn't value the asset. So just keep that in mind.
Okay, next question for preferred trust. Can I have a joint account with my spouse?
We get asked this a lot, and it's surprising because IRA really stands for individual retirement account. So there are no joint IRAs. However, both spouses can have their own account separately and can invest in a project together. That's not a problem, but the IRAs are separate. They're not joint.
Perfect. And for Ignite funding, how is the collateral secured?
That's a good question. So securing the collateral is done in 3 ways. Well, maybe 4. The first is obviously recording the deed of trust in the county in which the property is located. That's probably the most important, right? Because you want to make sure that you are recorded in a first position so that if anything happens after that loan is funded, that those liens fall behind yours. The second is the promissory note that we are signing with the borrower. This defines specifically how long they'll have the loan, so their duration of time, the interest that they're paying. If they had late fees, what did they look like? If they have an extension, how long do they have? That promissory note defines all of that. The third is the title policy. Obviously having insurance on that property, making sure that you maintain that first position lien is very important. So the title policy. And probably the fourth, and something that many of us don't consider, and maybe many of my investors at Ignite Funding don't even realize, is the degree we go to make sure that the property is insured. Here's why that would be important. Ignite Funding requires our borrowers to put us on their insurance policy as additionally insured through an endorsement. And I said that slowly because being additionally insured doesn't mean that you have the rights to file a claim against the insurance or to collect on it. But when you are endorsed on the policy, it changes the whole scheme of things. And I'm going to use a borrower as an example that thought they were being cutesy. And they filed a claim. And truly, we knew this happened. There was flooding that happened at the property, and they filed a claim against it. And the insurance company notified them and Ignite Funding. Well, they didn't realize that Ignite Funding was notified. But when they got the nearly $1 million check, it said borrower's name and Ignite Funding. So guess what they couldn't cash? And that is why those added protections are there on that collateral for that very reason. This just happened a couple weeks ago. Made me laugh because they called and they said, well, how are we going to cash this check? And I said, we're not. You're going to endorse it. You're going to send it to Ignite Funding, and we're going to ensure at Ignite Funding that the proper repairs are made on that property as they were intended. So those are the 4 protections, or how we collateralize those investments to make sure that you're protected as an investor.
Okay, how long does it take for Preferred Trust to deposit interest payments received for my investments? And do you provide monthly statements?
Okay, so I think we did answer the interest payment part earlier, but it's same day. So all interest payments, all payoffs are posted the same day that we receive them from Ignite. We don't offer monthly statements, but we do offer 24/7 online access. So you will be able to go online through our secure portal to look at your account. You can look at it every day if you want. You can watch the interest come in monthly. You can see any fees, your annual fees being assessed. You can look at your actual investments you have held there. And then if you do want a statement, we can also email that to you or upload it to your portal at no charge for you if you do want that. But we do offer 24/7 online access so that you can look at it and watch all of those transactions occurring.
And next question, can I convert my current traditional IRA to a Roth at Preferred Trust?
Yes, absolutely. That seems to be quite popular today. So that's not a problem at all. Most of the time when you have a traditional account at another custodian, they won't do the conversion for you. So what has to happen is you would open a traditional account at Preferred Trust Company, and then we would convert it once the funds arrive, and we would transition it to a Roth account. So yes, it's a pretty quick process. Again, a one-page conversion form that you would complete for us, letting us know how much you want to convert, if you want to convert it all, and we can do it with assets as well.
Okay, and last question here, will Ignite Funding be increasing interest rates to borrowers given the interest hikes?
Oh, I keep getting this question. I'm going to be honest and say I don't know when we're going to do that, or if we're going to do that. And let me tell you why. There is a huge market or need for loans, deal flow. We talked about this a little while ago about the consistency of deal flow. And, we pride ourselves at Ignite Funding with working with the same borrowers consistently time and time again. And could those borrowers go to another mortgage broker? Absolutely. And in fact, they may, but they always come back to us. And there's a reason why they do that, because we always fund on time. We don't beat around the bush with them. We don't take an extended period of time to evaluate the asset, because we understand their assets. We understand their business model. We are part and parcel of their company and the sustainability of their companies. So if I increase interest rates, and I don't foresee that in the very near future, but if I do, that obviously a lot of that gets passed on to our investors. Let's see how far we go with these interest rate hikes, because I'm not here to punish my borrowers. I'm here to make them successful. And when they're successful, our investors are successful in getting their interest payments. So increasing that right now, just to get on the bandwagon with everybody else, doesn't make good business sense to me. Now, there may come a time where that starts to make sense later on, this year, next year, whatever. I'll reevaluate at that time. But the most important thing to me is to keep my borrowers maintaining that level of success, because that ultimately, creates a success for all of us. So I'm tabling that question right now, but thanks for asking.
Okay, we've got one more question. What tax documents do you receive if you invest through an IRA?
So at the end of the year, we would provide a tax document 5498. So basically, this particular document tells the IRS what your total value of your account is at the end of the year, as of December 31st of that year. It also shows any contributions you may have made to the account. It shows any rollovers that you may have occurred. And again, the total account value. It doesn't really break down anything else. And then if you take personal distributions of cash or assets from your account during the year, you would get a Form 1099-R. Again, that's reportable of all the cash distributions that you would receive.
All right, I think that's going to conclude our Q&A unless Maddie tells me differently.
And that concludes our webinar for today. Thank you for everybody for attending. We hope the information you received is beneficial as well as educational. If you are wanting to contact either of the companies that presented today, you can see their contact information on the screen. Once again, thank you for attending. We hope to see you at our next webinar.